Welcome back to the O Show, everything crypto and NFTs every day. And I have a very special returning guest and also a good family friend of mine. I have Mr. Brian. He is over at Dame.io, and they're one of the firms that I recommend that are licensed financial advisors. I can't give you guys financial advice, but Brian here can. Brian, why don't you go ahead and give everybody a quick intro and reminder as to who you are, and then we're going to talk about the market and what you're seeing, because our insights are actually quite similar, even though we both do different things while we're trading or investing.
Good to see you. Thank you for having me on again. Yeah, I'm Brian from Dame. I'm the founder over here. We were the first of its kind licensed advisor. We got that license on May 31st, 2018. So that was 4 years ago. And what we do is we help individuals out there invest in this space and help manage their accounts. We do those from regular tax, like brokerage accounts, all the way through tax advantage accounts like IRAs, Roth IRAs, SEP IRAs. We run a model portfolio, which is our thesis on the space. So it's kind of like a fund with a manager on it, but it doesn't have the performance fee. So we are able to give it an opinion and give advice out there. And we do that for a lot of people. And we love to help out your followers as well.
Awesome. Awesome. So I remember I called you a little bit frantic the other night because I'm like, oh my God, I've got funds on Gemini. I've got funds on this exchange or that exchange. And I kind of wanted to pick your brain about what's happening, because we're seeing a lot of things that are exchanges coming out to be insolvent. And I personally do not believe we've seen the worst of the bear market yet. And I know people sometimes like, Wendy, you're crazy. This is a different market than 2018. But at the same time, we're talking about very speculative assets. Like, we know Bitcoin's got its place, Ethereum's got its place, and there's, a handful of other altcoins that do. But at the same time, I do not think we've seen the end of the crypto contagion. And that does make me a little bit worrisome, because I personally do not believe we found that local bottom yet. I just don't see Bitcoin capitulating and going sideways at this current area. And I looked at the charts today and it kind of reaffirmed that. It's not going to be a straight downward drop like we've seen. I feel like that blood is over, but I'm not 100% convinced that this is the bottom. And it's not about calling an exact bottom or top, but if I'm going to put in bids for a long-term, large size Bitcoin swing trade, I want to make sure I'm getting the best deal possible. So do you want to talk to us about what your firm is doing? Because you guys are managing client funds and business funds.
That's right. And I'll start a little bit with Gemini. And I was really glad you called me that day about that. And we went over things. We're partners with Gemini. We operate with them on platforms. So they are our primary custodian that holds client assets. They come from a regulatory stance. Like, first, that's their mission, to do everything compliantly, and they want to instill trust, and they do a great job of that over there. And as you see, they're kind of out of the headlines, from some of the craziness that's gone on with Voyager and some of the other exchanges. So we're glad to have them as partners in this. And then as for where the market's going, I do think we've gotten through the capitulation stage, but there's an agony phase that's likely to come here.
Okay.
And maybe we see that in over the next quarter. Maybe it plays out a little longer, but there's definitely macro headwinds that are coming. This market's still very correlated to the capital markets. So any pressure over there is going to be amplified really in the crypto markets, especially with some of the altcoin stuff out there. So I don't think your thinking is wrong, but on our guys, when we look at things, it's really like a long approach. You can be more of a swing trader. On our side, we're more of a long approach, but we're still like on the same opinion of, you kind of want to sit low here with some bids and see what happens and capture some downside wicks.
Yeah. And I mean, there's just a lot of unknowns that we have. And if you kind of want to go over your thesis and explain to people what you guys are thinking, maybe talk about stable coins, because let's face it, we know that crypto regulation is coming, which when Biden's executive order to essentially regulate crypto, which really was a work group put into place, came out, everybody was like, okay, this is great. We still have more time. Everything's fantastic. But in reality, when we went back and we're kind of looking at some of the updates in regards to that work group, a lot of it's coming out about stablecoins. And to me, I'm kind of taking a step back. Like, yes, we did have the Terra Luna debacle with the UST, which was an absolutely tragic and terrible thing. Stablecoins do need some sort of regulation, but I feel like there's a lot more damage that could potentially be done with altcoins right now and retail traders. And that's what they're supposed to be, somewhat regulating. So I believe you've got some insight on stablecoins and some other aspects of the market if you want to cover it for us.
Yeah, I'm going to share a chart with you here, and just give me a second to pull it up. So my team over here, we've been following the stablecoin market, and when you step back and you look at it over the last 2 years, it's really gone from 7 billion to 147 billion. That's a lot.
A lot of money.
Yeah, and this is, if these investors really wanted to be in the traditional like finance system, they would have done a wire back to their US bank. They would have went back to Bank of America or Wells Fargo. They wouldn't have stayed in stable coins or even in their native fiat, right? So they're either waiting to deploy this quickly, or they just want to stay in crypto because they believe in it a lot. And we think that this could actually increase some more in the short term, especially here with more volatility and coming into this agony phase. So this is something to watch, right? Like as stable coins could increase more, well, we think that that's coming from further selling in the altcoins, just guys trying to get anything they can, extrapolate any kind of value, and then retaining it in the cryptocurrency like space instead of TradFi. That way they could quickly redeploy in something maybe more favorable, like back to Bitcoin, right? So yeah, this is something we're going to continue to monitor. Again, it's been increasing. It looks like it's coming off a little bit here, but I have a feeling this picks up some more in the short term.
And then I believe you had some other data that you wanted to show the viewers as to why you believe that this $20,000, $19,000 area is just a local bottom, and we could potentially be seeing a little bit more downside.
Yep. So I'll show you another chart here. This one's showing the price cycles of Bitcoin. So now that we're at 13 years old, we can really only track data back to 2011 when there's some like really good data. But we're kind of going to start to look at classifying these as cycle 1, cycle 2, and cycle 3. Okay. So if you look at this chart, we got days from peak to trough, which is really this row here. And then we got days to recover. All right. Into where we go. So what we're thinking is on average from the peak down to the low has been 400 days. We're at a little over 222 from this one being made. So yes, we could say we're halfway through, but halfway through does not mean the exact bottom. And it doesn't also mean that the bottom is coming up in exactly 200 days. We're just somewhere in that range. So this kind of fits that narrative of yes, capitulation, and maybe there's agony coming, and where you want to start layering in over the next 200 days, being very patient through this part of the cycle.
And then you had something else that you wanted to show, is that correct?
Yes, I do. So a lot of people ask, well, okay, well, you know, this could be very negative, and you know, I don't know what to do in this space. Like maybe I should just wait to layer in and let the next 200 days go by. And we don't feel like that's really the move. You really want to have money in the system ready to deploy and set with those lower bids, because what could happen on the backside of this. So what's in the long term? So that's the next chart I'm going to show you. So we did an analysis kind of looking at the recent most volatile sell-off, which was the March 2020 low. And we compared it to the S&P 500, NASDAQ, with Bitcoin. Right? So you look at these three categories here. So from that March 2020 low, the S&P 500 went back up 114%. The NASDAQ was 134. But if you look at Bitcoin, it went up 1,259%. Okay, so what do we think this means? We think that Bitcoin's probably going to be more of a leading indicator for markets around the world. And that when we do return to a positive cycle, a better story, a good narrative, and Bitcoin goes into a bull market, it's going to move first before like the S&P 500 and NASDAQ, and it's probably going to move more aggressively. So that's what we wanted to share in this one and show as an example.
So for your firm, where are your Bitcoin bottom predictions at? And approximately how long do you think that this will take to play out? And are you taking into account Bitcoin halvening at this time?
Yep. So for us in the short term, for layering into positions, really anything's game from 20,000 down to 10,000. I know that's a broad number, but looking at some levels here, you know, you're really good with the technicals. We think maybe around 18.1, even 15,200. And then there's the odd chance for like that real bottoming out around 10.5. So that's short-term deployment for us. And then as we look for the long-term, and especially the cycle chart that we put in there, like that does point to around the halving in 2024. So that is the next big catalyst. But we also think that there's going to be a few other things that come along with the story. Taproot, for example, did enable smart contracts for Bitcoin. We have not seen anything really come to the forefront developing along those lines. Could that be the story in a year from now? It could be. But there's going to be something else that goes along with the halving that's going to reinforce a positive narrative and push us to back into a bull cycle and up to the upside.
I think that positive narrative is going to be NFTs. I am very confident that in the next bull run, it's going to be somewhat enticed by NFTs, Metaverse, play to earn, those types of aspects of this ecosystem. And the fact that you're talking about Bitcoin utilizing Taproot and that deals with Bitcoin smart contracts, that's kind of something unprecedented because we're seeing all this Bitcoin toxic maximalism. Bitcoin does this and blah, 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 blah. That's all we hear about. And that's great. That's fantastic. But the fact that Bitcoin does have smart contract capabilities now, but it hasn't been tapped into, we've got some time. We've got some time until the next halvening in 2024. And also to you guys, the halvening date does fluctuate and it does move because it depends on miners' productivity. It depends on the market. It depends on a lot of different factors. So you have to kind of take that into account. And I think that if we did, because I know that Counterparty does utilize some sort of Bitcoin technology for their NFTs, but it's not really built out. Nobody's really using it or building it out, et cetera. So I think that will be a big catalyst to happen. And then on top of it, we're seeing all this economic instability and Bitcoin is supposed to be a hedge against that. So I think that those are all factors that we do need to think about when talking about Bitcoin and just be a little bit cautious here and there. So as far as your firm's plans, what are some other tips that people can kind of take away from this conversation to maybe help them feel at ease or maybe to help them feel that they're doing okay? Should they set limit orders and vibe? Should they dollar cost average and vibe? Or is there a different strategy that they can do? Like me personally, I've got limit orders set for Bitcoin and I'm just simply vibing. I'm waiting for those to get hit. If they get hit, great. If they don't, that's fine. But I'm not really interested in dollar cost averaging too much on any asset because I don't feel that we've felt max pain. And the only type of assets I am buying in crypto are ones that I'm taking short-term trades on.
Yeah, we should also talk about like OPSEC, right? It's what exchanges are you on? Do you feel comfortable on those? Like, even are you good with your passwords, know where your keys are? You've always been good about telling that and repeating it. So definitely do that. Make sure you like the exchange that you're on. You feel comfortable with what you have. And then as for investing, you got to just be patient. Like, don't rush to think that we're making a turn to the bull market too soon. It's just be really patient with what you have. And then the other side is use tactics, right? If you're down a bunch, tax loss harvesting is something you can still do in this space. Write that up. Have a transaction log, develop a report, or use TaxBit, or come to somebody like us. We can help and work with these things, and use those tools to your advantage, right? Offset some income down the road. So that's another tool to be deployed in this space. And it might not be around by the time the executive order comes out in the beginning of Q1 of 2023, but it's here now and we can use it. So be safe. Know what exchanges you are on, be very patient with what you have out there, and use some tools to your advantage. And if you have tax advantage accounts too, look at what you're deploying away in capital markets too, and look at your percentage weighting and make sure you're allocating the right amount to maybe even your retirement accounts. Know what your personal position, right? Should you be 1% of your allocation should be to crypto? Well, if it is, then make sure all of your accounts maybe have that allocation throughout and inside of them.
I vibe with that. Well, Brian, thank you so much for coming on. And audience, thank you for watching. Make sure to like and subscribe. Also, if you do need some sort of financial advice, contact Brian. Do not contact me. I've got a prompt that if you email me, I will send you back and it'll just link you back to Brian because I can't do any of that stuff. But again, you guys be safe out there. Please consider learning how to use cold storage or removing your funds from exchanges. And just know that if you do have funds on exchanges and that exchange goes down, you could potentially lose your funds. Again, thank you so much for coming on, Brian. Have a good day.
Thanks for having me. Bye.